Hello everyone, welcome back to my channel. So this video marks the beginning of the week number 77 in this road to 100k realized return challenge, and in the opposite way of what has been happening over the past few weeks. I was very hopeful, as I mentioned in the last video, that the stock or the Q's shares would go up slightly in pre-market trading, but it was anything but that happened. The pre-market trading started in a very negative note, basically because of this news. Apparently a case or sort of a lawsuit was put in place by the US administration, apparently, on Fed Chairman Jerome Powell, because apparently the way the Fed Chairman has been conducting his monetary policy was not up to the US President's liking. In his perspective, the Fed Chairman should have cut rates much more aggressively up until this point. And so basically there was a criminal investigation going on against the Fed Chairman, which in my view it's absolutely ridiculous, because central banks should be completely independent from political power, and that's the main reason why the ECB, the European Central Bank, have in their treaties, in their statutes, that it's completely forbidden by leaders of countries, political leaders of any member state, to get in touch with the ECB president in an attempt to influence the course of the monetary policy decisions. And so, yeah, this is something that it's akin to third world countries, but yeah, it is what it is. So as a response of this, the markets came down pretty aggressively in the pre-market trading. You can see here that the markets opened up at around 622. The Qs opened at around 622. They were hovering around 620. The first time I looked at the quote this morning. So apparently he has recovered significantly somewhat, but still our objective to try to get a large premium and still be able to sell the calls at above our cost basis, which is 630, was completely out of the window. It would not be a satisfactory premium to begin with, given the situation that we have ahead of us. We have a CPI coming up, so we have a high volatility event coming up, so the premium that we would receive was not consistent with the amount of volatility that we would have. And so I decided to stay the course. We still sold calls with a 630 strike price. Now I sold for the entire week, and because making the calculations for the several options that we had expiring today, which basically make no sense because tomorrow CPI will be released before markets are open, so we would always have to use, at least to make sure we collect some reasonable premium out of this event, we would use at least an option expiring tomorrow or Wednesday or Thursday or Friday. And looking at all of these, the ones that offered the best return were the ones expiring next Friday. So that's the ones we went for, and basically we got apparently, looking here at our scoreboard, if we manage and this premium is already on, it's already ours, we received 1300. Of course here we discount the commissions, but still, if we by the end of the week we will have accrued a return, an annualized return of around 30%, which is very good, and in a stark contrast with the meager ones that we have been receiving recently. But still, this was good. We managed to sell these not at the price we wanted, which would be around $3 a share, but we still managed to sell these calls at 260, so we received 1300 in the process, and we use the remaining buying power to sell some Nvidia puts again at a 180 strike price. Now we went a little bit more aggressive on these. We sold a 22 delta put because at the time the premiums were a little bit less enticing on the lower strikes, and the stock was going up anyway. So the market was recovering. Well, when we sold the shares, we sold the puts, and so we still managed to collect $378 out of this. So not as much as we wanted because the stock was rising, so the puts lose value, but still it was something that it was not that bad, and we still be able to collect around 50% return if we manage to let it go towards the end. As you can see here, it will give us an annualized return of around 51%, which is still very good. And with the remaining buy power that we had, we sold another put on ARKK. We got 23 cents on these. Now, this will not give us as big as a return. I think it was around 20%, something like that. Yeah, so it's around 20%, but still, it makes sense because we decided to go more conservatively on ARKK because it's more volatile ETF, it's less liquid, so we would really appreciate if we don't get a sign on this. So I chose a strike price which is quite some way away from the current share price, and that is why we received a lower premium and we'll get a lower return at the end of the week. So this is how things have been shaping up today. The markets are recovering, so apparently the impact of this recent development is being basically ebbing away from the minds of investors. Notwithstanding, Nvidia now is down again. The stock is going down because the puts are gaining value, but still we don't mind too much being assigned Nvidia shares. It's okay. Now with these 630 calls, we will have to see if the stock hits the 630 or exceeds it by the end of the week. We don't have any more buying power for now, so the only way we will get more premiums out of this week is if we buy back some of these puts and we roll over in some way, either to other strikes or other underlying securities. But so far, if things stay as they are, as you can see here, we will have collected in premiums almost $1,700, which is again a good week after the drier weeks that we have been having so far. So I'm happy with that, and it gives us some leg up towards the end of this, towards the end of this this challenge. But so far, this is it. Feel free to leave your comments in the comment section down below. I'm also available on LinkedIn in case you need to ask me any questions. And as always, feel free to like the video and subscribe to the channel. We will reconvene at the end of the week to see how the trades went and to close out the week 77 in this challenge. And I'll see you there.